You're watching Reality Check. The first indication that the second COVID wave has hit India's growth has come from the International Monetary Fund, which in its latest report on the world economy has downgraded India's growth projection for this financial year. As significant as that number are the reasons why. Joining me to talk about what lies ahead for both India and the world is the chief economist of the IMF, Geeta Gopinath, joining us from Washington, D.C. Geeta Gopinath, great to have you on as always. Let me just start with India, as we always do. So your projection is to downgrade India from 12.5% to 9.5% for this current financial year. Is that largely, as you seem to suggest, because of the way the second wave hit India?
Hi, Srinivas. It's always a pleasure to join you. Now, when we put out our forecast in April, at that time we had said that one major risk was what we were at the start of, which was the rise of the second wave in India, and if that led to widespread lockdowns. So those risks did materialize, which is why we have the downgrade of 3 percentage points. Also, in terms of the recovery and looking forward, we have a fairly modest recovery because we think that the confidence will not come back as strongly as it came after the first wave. There's still uncertainty about the next wave of the pandemic. Yes. So because of these factors, what we are seeing is kind of a fairly gradual recovery.
Okay, so in other words, God forbid we don't have more waves, but were that to happen, we could see a further drop in growth.
Well, if there was another wave to hit in a way that, again, required some very strict limitations on mobility, then that indeed poses an important risk on the downside.
Right. I think one of the more concerning things about this, Geeta Gopinath, was the fact that, in a sense, it was assumed that because so many countries are going through second and third and multiple waves, there would be a downward revision in growth of most countries. But India, we're just looking at the chart, appears to have seen the largest drop in growth projections. So you have all the countries that are actually seeing an uptick, particularly developed world countries like UK, Canada and so on. India is right at the bottom. There's Spain in negative, China negative, Japan, Saudi Arabia, and then India at -3. So we seem to have been hit the hardest.
The second wave in India was really catastrophic. It was unlike what we've seen in many other parts of the world. Now, yes, you have seen such a situation, for instance, in Brazil and some other countries. But again, in terms of major economy being hit so hard with the health system under such severe pressure, all of that is, really did lead to a downgrade. But again, when you compare numbers, I think it's important to keep in mind that the baselines are very different, right? We had India 12.5% growth. India's overall growth numbers are, in absolute numbers, tend to be bigger because it's an emerging market. So I wouldn't make this very quick comparison, but there's no doubt that this was a very, very severe second wave and it hit India very hard.
Right. I think the wider point you seem to be making in this latest report is interesting and concerning. You seem to be suggesting that there is a kind of global divide, if you will, where overall world growth, there has been an uptick, but that's largely been driven by the wealthier countries and the wealthier economies, and it's the more developing nations that are actually not doing so well. And you point to two reasons for that. One is a certain degree of vaccine inequality or vaccine inequity, and the other is the lack of sufficient stimulus, particularly by the developing world. So I'd like to talk to you about each of those one by one, starting with the vaccine challenge or the vaccine divide. Geeta Gopinath, take us through that, what you mean by that and how that's contributing to one half or one section of the world not doing as well as the other.
So we have been warning about this dangerous divergence, and what our numbers basically say is that it's getting worse. So we actually have no revision for our global growth numbers. It's still 6%, the same number we had in April. But basically what we have is an upgrade for advanced economies that's offset by downgrade for emerging and developing economies. So indeed, the vaccination story, the inequity in access to vaccines is a very important part of it. In the advanced economies, we have, on average, 40% of their population fully vaccinated. That number is 11% in emerging markets. And when you get to low-income countries, we're talking around 1 to 2%. So there is this big divide. And at least when it comes to seeing a revival in services sector, it's very important that people are able to go out and go to restaurants and travel and so on. And that kind of recovery is just much harder to make happen when you have large unvaccinated populations and you see cases going up. Now, for instance, we have the downgrade is being driven by emerging Asia, which is really rare because emerging Asia is usually the big engine of growth among emerging markets. But it's entirely driven by the pandemic. And it's not just India, but it's also, Malaysia, Thailand, Philippines, and so on. So it is very much a pandemic-driven story, and it's being driven by this big vaccine divide that we still have, though we are now like more than 7 months into having the first successful vaccination being put in arm.
Right. Now, in India's case, the story is somewhat more complex when it comes to a shortfall of vaccines, because it's almost ironic that India is considered the vaccine factory of the world, and yet we are also amongst that group of countries that are struggling to cover a significant percentage of our population.
Well, India is also has one of the largest populations, so that it would be nearly impossible to have all of this done in like 2 months. It's a very large number of people. If you look at the current rate of vaccinations in India, which is last time I checked was about 4 million a day, vaccine shots a day. At that pace, we project India will cover around 38% of its population by the end of this calendar year at that pace. But again, here is where I think the biggest action can be done, which is to ramp up vaccinations and increase production. Now, it's very heavily dependent on a few production sites, including the Serum Institute of India. The question is, can we get more production going in India for the next several months so that there is a ramp up in vaccinations?
But the challenge here, Geeta Gopinath, and this is not just unique to India. India, of course, has the advantage of domestic producers like Serum Institute and others, but their own production capacity, even if ramped up, will fall far short of the kind of requirements a country like India has, which is why India is now talking to other big global giants like Pfizer and so on. Except having come somewhat late to the party, they're all sold out. They're heavily booked out with multiple other agreements they have with other countries around the world. What's the way around that, you think?
So certainly, I think in terms of countries that are ahead and those that are behind, there is very much the countries that put in their procurements very early are doing better than the ones that did not. In terms of what now, given that there is a certain amount of production that's going to come in, again, if you look at projections of how much vaccine doses will be manufactured this year, by a conservative estimate, we would come up with 7 billion doses this year, and the manufacturers think they can have all the way up to 10 to 11 million doses.
Sure.
So there is, billion doses. So those are very large numbers. The problem is where it's going. We have, if you look at the rich nations that have bought many multiples, they have an excess of 2 billion doses, once they vaccinated 75% of their populations. So this is why we've been pushing for a very concrete ask. We're saying, well, between now and the end of this calendar year, you should donate 1 billion doses, either bilaterally, but mostly through COVAX, because then that gets allocated appropriately too. There has been, thankfully, there's been some action on that front. The G7 announced 800 million plus doses, of which 500 million are supposed to be delivered this year, but before the end by December. I think, again, what needs to be done now, first, is ramp that up by another $500 million, and also deliver the ones that you've actually said you're going to do. So we really need that to come through. And if that does happen, I think then by the end of this year, we will be actually in a position where we can cover more of the world.
Right. I was just going to ask you that, because I know that you and several other global multilateral bodies have been pushing for this, pushing for rich nations to be more generous in their distribution of these vaccine stocks. And you're saying you're seeing some indication of that, but still a long way to go.
I'm definitely seeing. I want to think of this as a glass half full. We are absolutely seeing action there. Like I said, 500 million doses this year. Good place to start. But I'm hoping that there will be further announcements that we can get another 500 million doses.
Right.
Get those shots in arm. We need some financing to prepare countries to receive those shots. Part of the problem, Srinivas, is that many of these countries have no visibility of when they're going to get enough vaccines. And because of that, it's very hard to prepare your healthcare system to put shots in arm when you have no idea when you're going to get them. So we're trying to solve that problem, which is through this task force that's been set up across the 4 organizations to identify where the gaps are, who needs to do what, clear announcements. So hopefully we're building momentum on that front to achieve the targets.
Right. Now, coming to the second part of why you have pointed out that when it comes particularly to the developing countries, they seem to be struggling compared to their sort of better off counterparts, just to put it in simple terms, is this shortfall of stimulus. Again, looking at a country like India, and we had this conversation last time as well, the government keeps claiming that they've committed, crores of rupees, millions of dollars in trying to get the economy back on track, but it doesn't seem to be enough. We still are struggling.
So yes, the fiscal support is another major source of the divide. We are projecting that advanced economies will provide still considerable support this year. But if you look at the forecast for emerging and developing economies, for most of them it ended last year. And there's very little in the additional relative to last year in terms of the pipeline. So we're not looking at much there. They're already into consolidating their fiscal position. So that's another very important source of the divide. Now, specifically on India, the approach was to focus more on what you call below the line measures, which is in terms of loan guarantees and so on, as opposed to direct expenditure, revenue-based expenditures. That number went up over the last several months that we've been talking about this. It went up to around 4% of GDP, though 2% is what got ultimately spent in the last fiscal year. But again, this is a changing picture. We're not in a kind of a constant, predictable environment over here. So when the second wave happened, I think it was very welcome that the government extended the free food and ration program, that they've now centrally procuring 75% of the vaccines and making them available for free to states. I think those are all a good moves. But that said, I think more needs to be done. The budget is very heavily focused on capital expenditure, which is very important. India needs greater infrastructure. That's important. But implementation constraints are big, and most of it gets done by the states. So that's an issue. So I think more can be done on the revenue expenditure side in terms of helping low-income households, funding for education, which has really been hit hard during this pandemic, helping MSMEs. I think more can be done there.
So many economists and India watchers have pointed out the importance also of just direct cash transfers and a fairly significant amounts. The government has done some, but the amounts are very, very small. Where do you weigh in on that, and how important is that as a step to get things, to turn around things?
This pandemic has been very, very hard on lots and lots of people. But if you look at the numbers in terms of how many that entered extreme poverty over 2020 and 2021, including taking into account the recovery to some extent, we're looking still at close to 30 million people who are in extreme poverty. So, support will be needed, income support will be needed for these people and for others too, not just those in extreme poverty. I don't have a number for you on exactly what that should be. We're doing some analysis and we might come up with it, but I don't have that number right now. But indeed, support needs to be provided. Now, there's always, of course, let me just be very clear. In the case of India, of course, there is the question of how much more fiscal space does the government have to do all of this. And here is where I would make another point, which is it's very important to kind of credibly announce the measures that will get India back onto a, the typical fiscal deficit numbers that we see. Not now, it should not be implemented now, but there is a need for a credible medium-term fiscal consolidation strategy. And if that's done, then that also provides assurances to markets and helps with the financing that's needed to do the kind of revenue spending that's needed at this point.
Right. I was going to actually come to that in just a second about how India would be able to afford it, and we'll try and get you to talk about that in terms that are a little less technical and comprehensible to our ordinary viewer. But the government still seems to be reluctant to actually do that, to actually, commit to significant cash transfers. Just today, the finance minister said, or I think yesterday, that we're not going to print cash. We don't believe in helicopter money. This is even as the government does actually give cash transfers, if that's what she meant by helicopter money, just that they don't do enough of it. So is this continuing kind of reluctance beginning to become somewhat of a problem?
So Srinivas, firstly, cash transfers are not helicopter money. It is not money financing. That's cash transfers are, giving cash to households. The question is, how do you finance that? How does the government finance that? You can do that by raising money on the markets, or helicopter money is literally the central bank financing directly that expenditure, where I believe that there are very serious risks associated with that. Now that's separate from borrowing on the market, which the Indian government can do, and we still believe has the space to do it. So I don't know if that was clear about the distinction between those two, but anyway, but
sure.
It's not the same thing.
Right.
And this is why I said that when it comes to being able to raise financing on the market so that you can provide the support that's needed, it helped to have a credible fiscal plan about how, once you're past this pandemic, how will you be bringing down these fiscal deficits.
Okay.
And the government announced privatizations. That was an important part of it. But of course, there are huge challenges with getting privatization to happen.
Yes.
So there is important measures that can be done on revenue raising side, which is from more robust GST collections, in increasing the size of the base. So those kinds of policies will give assurance to markets. And I'll just make one last point, which is that.
Yes.
This kind of expenditure is needed to prevent greater scarring in the Indian economy. So this can help get to an outcome where you get a stronger recovery that helps with the government's finances too. So we have to keep that in mind. It's not that you're just spending now and all of that is going to be a problem. You're trying to get back a faster recovery, and that helps even fiscally.
Okay. So just to be clear, what you're saying in simple terms is that in order to try to be able to finance some of this extra spending, India shouldn't be India should look for other alternatives and not be printing cash, which, some have suggested. You're saying that's a bad idea?
I think given what we're seeing in terms of inflation numbers in India, given concerns about inflation expectations, we are certainly seeing some countries do that, including emerging markets, just literally printing cash. But you do that at a very, very minuscule level and with a very clear sense that this is just one time and it's happening now. So I don't think there's a huge amount there that India can do in terms of just money printing to solve its problem. That's the point I'm making.
Okay. But the concern here, Geeta Gopinath, is that, as you point out, the kind of traditional sources of how the government would raise revenue, which is to try and increase tax collections or to try and privatize, those are extremely challenging in the best of times. But right now, in the middle of a pandemic hit economy, you are even more constrained. So how really can you raise money? Sure, as you said, you can try to borrow more, but how much can you really go down that line? And what does it also mean to your fiscal deficit? And is that something which India should say, look, right now we're not worried about that. The main thing is just to put more cash in the system.
So right now, all countries are functioning with high fiscal deficits. Fiscal deficits will go up if you're going to do the kind of spending that's needed. this is not the time to be, aggressively raising revenues and, you can't do this for all the reasons that you just mentioned. So this is why this is more about saying that you need the money now. You're going to be running larger fiscal deficits, but you have a credible plan of how you will bring down your debt, how you will bring down your deficits over the next 4 to 5 years, which you won't be implementing right now, but you have a very clear plan. So that, and if you look at borrowing costs around the world, Srinivas, they are, for most countries, they're lower than they were before the pandemic.
Right.
So there is a lot of liquidity in the markets, and given you need to do these kind of necessary measures to ensure that you don't have a prolonged, deep scarring in the economy.
Okay.
This is also good for your fiscal prospects in the future.
Okay. Give us an example, because you have, from your perch, you have a global perspective on this, and this is not to, pit country against B, but when you look around the world, which are the countries, the economies you're seeing which are getting some of this right, which is getting the mix right of being able to, provide this stimulus without necessarily being, reckless or profligate?
Many countries are actually doing that. And again, even in the case of India, the fiscal deficit projections are very large, much above what the typical target is.
Okay.
So many countries are, the markets have been very favorable in terms of letting countries.
For example, Geeta Gopinath, give me an example. for example, of a country.
So, first of all the advanced economies have done that. Very, very high levels of expenditure. We've seen that everywhere.
Okay.
If you look at emerging markets, they've done lesser amounts of it. But if I were to say, I would say the vast majority have actually, embraced the idea that when you are in a severe pandemic, the fiscal support is absolutely essential.
Okay.
And I'll give you the example of, for instance, one prominent emerging market, which is Indonesia, which actually did use some amount of monetary financing, the kind of money we were talking about earlier,
right,
in the start of the pandemic, and they did it, but they did it by a small amount, and it was completely clear this was temporary and transitory. So that worked. A small amount of monetary financing did work.
Okay.
And it didn't have a big effect in terms of inflation expectations or anything. But that's one example. But again, like I said, this is a tricky landscape.
Right. So just a small amount of print. If you're going to print cash, do it, in a very limited kind of focused, surgical way. But don't, nothing beyond that. I'm told we're completely out of time. I'd love to keep going. But thank you so much indeed, Geeta Gopinath. Always a pleasure to talk to you.
Thank you. Same here.